Hello students, welcome to Accountancy Point where we discuss the accounting concepts. Today we are going to discuss the Goodwill Concept and Valuation Part 2. In the previous video, which was uploaded a day before, we had discussed Part 1 where we studied the theory part or you can say the concept of Goodwill. Today we are going to focus on the valuation of Goodwill. As you can see that these are the methods of Goodwill valuation. There are three methods of Goodwill valuation. First one is average profit method. Second one is super profit method. Third one is capitalization method. Average profit method is further subdivided into two parts, that is simple average profit and the weighted average profit. Super profit method does not have any classification. Capitalization method is further subdivided into two, capitalization of average profit method and capitalization of super profit method. That means altogether we have 5 methods to discuss in this particular chapter. That is 1 simple average, 2nd weighted average, 3rd super profit, 4th capitalization of average profit, 5th is the capitalization of super profit. Now let us take our discussion further to the steps which we are going to follow in case of simple average profit method. As you can see, the first step is calculate average profit. You can use the formula sum total of the net profit of all the years which have been reported to you in the question divided by number of years. And then when you are done with average profit, you will go ahead with your second step and you will find out the amount of goodwill by using the formula years of purchase into average profit. Now the question is, there are a few questions where there are certain adjustments given. So in case if there is an adjustment related to any abnormal loss, abnormal losses are those losses which are not the regular conducts of the business. They do not take place regularly in the business, like goods lost by fire, goods destroyed or stolen by the employees. So these are certain type of abnormal losses which are when deducted from the profit. In order to correct it, you are supposed to add back to the profit which have been reported for that particular year. If there is any abnormal profit, what do you mean by abnormal profit? Abnormal profit are those profits which are once again which do not take place in the normal functioning of the business. They are not regular in nature, they are non-recurring in nature. For example, interest on investment, income from lottery. These are some of the incomes which are not the regular conduct of the business. That is why if they have already been added to the profit, in order to correct it, you are supposed to subtract them in order to get the normal profit. There are many questions where some expenses are mentioned, like remuneration to the partners have not yet been provided. There may be certain expenses like management cost or some insurance premium. All these are not yet paid. So in that case, you are supposed to deduct it from that particular year, or on an average, it has to be deducted from all the years. Now, we will see a sum based on simple average profit method. Here is a question which I have taken. As you can see, there are two partners A and B sharing profits and losses in the ratio 2:1. C is admitted with 1/5 share in future profits. For this purpose, goodwill is to be valued at 3 years purchase. Please underline the number of years of purchase because that will help you in solving the sum of the average profit. This is the method which tells you which method to follow and how many years average profit. The profit of past 5 years are given, including 2014 where there is a loss. You are supposed to calculate amount of goodwill of the firm and the share of C in the goodwill of the firm. In order to do this, we will follow the first step. According to our first step, we are supposed to find out the average profit. For this, I asked you all to add the profit of all the years. So since there is a loss, so we will subtract it from here, 50,000 plus 40,000 minus 30,000 plus 60,000 plus 80,000 divided by 5. Now if we add 50,000 plus 40,000, 90 minus 30, 60, 60, 120, 80. So it is 2 lakhs divided by 5 is equal to rupees 40,000. So this much is your average profit. Second step is to find out the amount of goodwill. Amount of goodwill will be years of purchase into average profit. Writing formula is very much needed, and you are supposed to write formula even for the average profit. First of all, you are supposed to write the formula and then put the value. Here, years of purchase as given in the question, it is 3 years. So we will write 3 into the average profit which we calculated was rupees 40,000. So our amount of goodwill is rupees 1,20,000. This is the goodwill of the firm. Now we are supposed to find out C's share in firm's goodwill. So C had admitted the firm with 1/5 profits in the future. So we will take out 1/5 out of the firm's goodwill, which is 1,20,000. It will be rupees 24,000. So this is the goodwill which C will bring into the firm. Now we will make a few modifications in the same question if there are some adjustments, and then we'll see how to solve the sum. Now this is the same question. I have not made any change in the question. I have just added a few adjustments over there. If you can see, the first adjustment which has been added is profit of the year 2012 includes income from investment, rupees 10,000. Now children, income from investment, it is an abnormal income, and as discussed just now, that if there is an abnormal income, you are supposed to deduct it from the profit of that particular year. Net loss, second adjustment is 2014 net loss is shown after debiting loss due to fire rupees 10,000. So it's an abnormal loss, and abnormal losses as discussed previously will be added back with the profit of that particular year. The third adjustment is the remuneration to partners is to be paid rupees 5,000 per annum. That means every year we are supposed to deduct 5,000 from the profit. So for your understanding, I have just made a few columns in order to understand it as working notes. I have written the years 2012, 13, 14, 15, 16. These are the years which have been mentioned. Profit for this year is 2012 is 50,000, 13 is 40,000, 14 is a loss of 30,000, 15 is a profit of 60,000, and 2016 there is a profit of 80,000. Now let's go for the adjustments. Our first adjustment was income from investment, and it was for the year 2012. So in the year 2012, we will deduct, since this is an income from investment, it is an abnormal income, so it has been added with the profit. So to correct it, we will deduct 10,000 from here. Now let's go to the second adjustment. It is an abnormal loss. So the abnormal loss has already reduced your profit. In order to correct it, you will add it back with the profit of the year 2014, and we are supposed to deduct remuneration for the partners per annum, since it is related to every year. So we will be deducting it from the profit of all the years. So after this, we are left with 50,000 minus 15,000 is 35,000. 35,000 once again. 30,000 plus 40 minus 5. 35,000 once again. 55,000 and 75,000. Now the same step we will follow. Average profit is equal to sum total of profit reported divided by number of years. So over here we will be adding 35,000 plus 35,000 minus 35,000, because this is the loss of 35,000. My mistake. Minus 30,000 plus 10,000 is minus 20 minus 25, it will be minus 25,000. So it will be minus 25,000 plus 55,000 plus 75,000 divided by 5. The balance for this will be 1,75,000 divided by 5. So the average profit will be 35,000. And now the second step is the amount of goodwill, that is years of purchase into average profit. So years of purchase remains the same, that is 3 years. Your average profit is 35,000. So the amount of goodwill will be rupees 1,05,000, from which you can calculate the C's share. His share is 1/5 of the goodwill of the firm. So rupees 21,000 he will have to bring in order to compensate as his share of goodwill amongst the partners. Now we'll move on with the next method, that is the weighted average profit method. This is the second method, that is weighted average profit method. In order to calculate goodwill by this particular method, we must follow these steps. The first step is to calculate the corrected net profit. In case if there are some adjustments, we'll find out the corrected net profit. Otherwise, the profit which is reported, that will be sufficient enough. Second, after the corrected net profit or the reported profit which has been mentioned has been written down, then we will assign a weightage. If the question has already informed you the weightage for the specific years, then you are supposed to follow the same weightage. If not, then before you give the weightage, first of all you are supposed to arrange all the years either in the ascending or the descending order, and then you can give the weightage like 1 for the first year, 2 for the second year, 3 for the next year, and so on. After you have assigned the weightage, you will find the product. How to find out the product? You will have to multiply the weightage with the net profit which has been either given in the question or you have found as the corrected net profit. After that, you are supposed to find out the sum total of the weightages which have been assigned, like 1, 2, 1 plus 2 plus 3 plus 4, you will add all the weightage. And then you will find out the sum total of the product which you have found by multiplying these two. Next to that will be finding the weighted average profit by the formula sum total of product divided by sum total of weightage, and then the amount of goodwill of the firm, that is years of purchase, into weighted average profit. Now let us see a question in order to find out the weighted average profit. I have not made any change in the previous question. I am taking the same question where we are going to find out the goodwill with the help of the weighted average profit. For that, once again, I would suggest you all to go for the working, and in this working column you will first of all mention the year which have been mentioned in your question, the net profit which have been reported, the adjustments which are supposed to be made, and then we will make the corrected net profit. After the corrected net profit, you are supposed to give the weightage, and then you will find out the product. So these are the columns which you are supposed to fill in first, and after that we'll move ahead. The years are 2012, 2013, 2014, 2015, 2016, and the net profits which have been mentioned is 50,000 for the first year, 40,000 for the second year, 30,000 loss for the third year, then 60,000 profit for the fifth year, and then there is a profit of 80,000. Now adjustments, the first I am keeping the same adjustments again, that there is an income from investment of rupees 10,000 in the year 2012 which have been already added, so I am supposed to deduct it over here, minus 10,000. And there is a loss due to fire for the year 2014, so I will add back rupees 10,000 in the year 2014, and then I am supposed to pay remuneration to my partners 5,000, So from each year's profit, I will deduct 5,000. After doing these adjustments, since there were only 3 adjustments, so I have made the adjustments. Now I will find out the corrected net profit. My corrected net profit is 35,000, loss of 25,000, and then 55,000, and then 75,000. Now if you can see, there was no weightage given in the question. So what I'm supposed to do is, the years are already arranged in the ascending order. Now I will give weightage, 1 for the first year, 2, 3, 4 and 5. Like this I have given the weightage, and now I will find out the product. The product can be found by multiplying these two, 35,000, 70,000 minus 75,000 plus 2,20,000, and 75,000 is 3,75,000. Now we are supposed to find out the total of these two columns. If you add 1 plus 2 plus 3, 6, 4, 10, 5, 15. And we will also add these all columns, 35,000 plus 70,000 minus 75,000 plus 2,20,000 plus 3,75,000. So the total is 6,25,000. Now we will use the formula to calculate the weightage average profit. Formula, if you remember, once again we are supposed to write the formula: sum total of product divided by sum total of weightage. Over here, sum total of product is 6,25,000 divided by 15. So if you divide it by 15, it comes up to rupees 41,666.66, which I can round it off to 41,677. Now amount of goodwill, the same formula, years of purchase into weighted average profit. Years of purchase is 3 into 41,667. So it will be rupees 1,25,000. And now what I can do is, we have to find out C's share. See, it is not necessary that in each question you will be asked to find out the new partner share. This is 1 by 5 of 1,25,000. So it will be rupees 25,000. So the new partner will bring this much of goodwill. The next method we will see in the next video, which will be released very soon. Till then, solve the sums based on goodwill. And if you have any doubt, you can give your comment in the comment box and I'll be ready to help you. Thank you.